In today's video, we'll be discussing the Dallas housing market and the current conditions here of our economy. And as you all know, the housing market can be very complex due to many factors such as supply and demand, interest rates, our economy, home affordability, and so much more. So we're going to be touching base on all these subjects in this video, so make sure you stay till the end. Hey guys, my name is Shanza. You're watching the Life in Dallas channel, where we talk about all things living in the Dallas metro and more. And once again, I am a real estate agent here, so you can most definitely reach out to me regarding any of your buying and selling needs. I will be more than happy to assist you guys. All my contacts will be down in the description box. I want to catch you up on the current economic conditions. Last time we spoke, I mentioned how the Feds, which is basically the Federal Reserve, is trying to combat high inflation, and they're doing this aggressively, and this caused a slowdown in many sectors, and many banks have collapsed as well. There's banks still collapsing, unable to stay afloat, going bankrupt. But big banks like Chase, Bank of America, Citibank, these banks are getting multi-billion-dollar deposits still, but while the small ones are suffering, but the Feds are still trying to bring down inflation to around 2%, right? Consumer price index is about 6% in February to 5% in March, which is good. That's showing signs of slowing down. Now, the annual core inflation, which reflects the measure of inflation that excludes prices of certain items that tend to be more volatile, such as food and energy. Now, the core inflation rate is considered to be a better indicator of underlying inflationary measures because it focuses on the long-term trends rather than the short-term fluctuations. It is the preferred measure of inflation used by the Feds as a guide for making monetary policy. Annual core inflation rose to 5.5% in February to 5.6% in March, which is the first annual core inflation increase in 9 months. And I do believe that this played a factor in the continuation of raising interest rates. Now, people are wondering why the Federal Reserve still raised rates while our economy was still showing signs of slowing down and that the banks failing and everything. The Feds would rather be aggressive and raise the rates more than they need to and be lenient and not raise the rates enough and have inflation creep back up again and be harder to tame, like what happened in the past in fears of hyperinflation or stagflation. Also, the unemployment rate, you guys, is still very historically low. In fact, the new jobs report showed that the unemployment is now at 3.4%, down from 3.5%. The federal government is expecting to target an unemployment rate of around 4.5% by the end of the year. That's over 1 million Americans losing their jobs. And instead of people losing jobs before, they're getting more jobs, which is also contributing to the wage inflation, which contributes to the overall inflation. So people are making more money, then they're spending more money. And if they're spending more money, inflation goes up. And that is what the Fed is trying to avoid. Again, that also played a factor in why we rose another 25 basis points in the federal funds rate. Now, I do believe that they will continue to probably raise the rates, as they monitor the economic conditions. Now, the GDP actually increased at an annual rate of 1.1% for the first quarter in 2023 compared to the fourth quarter of 2022. Which increased 2.6%. Now, for the first quarter, they were anticipating a growth of 2%, but it actually came out to be 1.1%. So a drop in GDP or an insignificant amount of growth usually signals a slowdown. So people seem to be cutting down on the excess spending than before, which is good. That's kind of like the agenda for the Federal Reserve. So I do expect the economy to slow down moving forward from here. I also believe that the 30-year mortgage rates will probably be back in the fives if we do hit a recession or anything like that, because typically in a recession, the mortgage rates drop. That might be towards the end of 2023, beginning of 2024. And many are anticipating that we are going towards a recession here at the end of 2023. Some are even saying that we can avoid a recession just by the tightening of lending. But hey, let's see what happens. Many economists and financial experts are confident that a recession will happen sometime later in 2023. Now, the depth of the recession is unknown. I see more indicators of it happening versus not happening. It could last for 2 months. It could last for 3 months. It could last for 1 month. As for the housing market, it's a little tricky because a recession doesn't always equal a housing market crash or even a correction. If we look at the past 6 recessions, there have only been 2 of them that resulted in home depreciation. One was in 1981, which is around 2%. And then the second one was in 2008, which was almost around 20%, the one that we all know about, right? And the other times you can see that it was positive growth in housing. So I don't want you to automatically assume that a recession equals a housing crash. Now, according to CoreLogic, a recent report stated that the housing market hasn't just stabilized, it might be returning to growth mode. Now, the CoreLogic's HPI forecast indicates that home prices will increase year over year by around 3.7% from February 2023 to February 2024. So a year from now, they're anticipating that the prices will grow steadily. Now, nationally, homes had increased 4.4% in February, and the chief economist also added that the divergence in home prices changes across the U.S. reflects a tale of two housing markets. Decline in the West are due to the tech industry slowdown and the severe lack of affordability after decades of undersupply, and the consistent gains in the Southeast and South reflect strong job markets. In migration patterns and relative affordability due to the new home construction, writes Hep, the chief economist of CoreLogic. I'm not sure how you pronounce her name, but this is important for us to look at because it shows us the bigger pictures. Because frankly, some parts of the U.S. are suffering right now, while other states are in the positive and having multiple offers, and their housing market is like on fire again. And in my honest opinion, I believe that the rate of appreciation here in the DFW is going to slow down compared to the past years. Some states and cities will probably end the year in negative growth, and others will be in the positive. One thing I must add to this is the U.S. has failed to keep up with the housing demand of the increasing population, particularly when it comes to millennials who are now at their prime home buying age. The National Low Income Housing Coalition says that the U.S. has a shortage of 7.3 million units. And Realtor.com says we have a shortage of 6.5 million units. And then Fannie Mae says we have a shortage of 4.4 million homes. And after the Great Recession, new home construction dropped. Fewer homes were built in the 10 years ended in 2028 than in any decade since 1960s, which is crucial. The materials and the labor shortage during the pandemic fuels this shortage as well. And one of the primary factors that affects the housing market is the balance between supply and demand. So in Dallas, the demand for housing has started to grow due to a growing population and a strong job market, now particularly in the tech and finance industries. Now, on the other hand, the supply side of the housing market has been limited due to these sellers being locked in on their homes with these low rates. According to Goldman Sachs, 99% of borrowers have a mortgage rate below 6%, and then 28% of those borrowers have a mortgage rate below 3%, 72% have a rate below 4%. They're in no rush to sell anytime soon to get a higher mortgage. In fact, many of my clients with low rates are actually wanting to turn their properties into rental properties instead of selling them, which I feel like a lot of people are going to do, and that's going to take more away from the supply. Now, maybe when rates come down to the mid 5, maybe they'll decide to sell, maybe we'll get some more inventory then, but then again, we have to remember that lower interest rates brings more buyers and more activity into the market as well. Let's actually look at the local MLS data. The median home value for the entire MLS fell from the July timeframe in 2022 to January 2023, which was around a 12% drop. Now, January to April, prices went up 6.5%. So they are following along with the seasonality. So usually we do have a rise in home prices during the spring, summertime. That's when we also get more inventory as well. But then again, people are not wanting to sell. And then we usually top off around the end of summer until winter time. That is when we kind of bottom out in the markets. We don't know if the bottom of the winter market will be above these prices right now or below these prices. We don't know that. So you really can't time the market. If you can see that our entire MLS is down 3.5% year over year. And for the entire MLS, we also have 2.5 months of inventory, which is low as you can see from the past. The summer of 2019 is when the inventory started falling and it never got back into those levels. It's still pretty distressed. Okay, you can see that it picked up in 2022, but then it fell back down. So I want you to see that we have a lack of supply here, which is a critical factor that is going to be a cushion for the housing market. Let's look at some of the top counties here, okay? So let's look at Denton County, Dallas County, Tarrant, and Collin County. These counties are still in the negative, as you can see here on the right side. They're all starting to rebound up, and I do believe that they're going to continue to grow up until the end of summer. That is when the inventory is going to fall, and that is when the home prices are going to fall as well. And we don't know, maybe the interest rates will be well above 7% at that time. So I mean, that's why you can't really time the market, because we don't really know what's going to happen 100%. So all in these major counties, we have an inventory less than 2 months supply, which is still very, very tight. You know, I'm on the field working every day with buyers and sellers, homes above the $1 million range that are getting multiple offers today. In fact, we went to go see one today. They're calling highest and best by tomorrow, and it's only been 3 days on the market. That is just a little snippet of what you can expect here in the summertime. If you're coming from a market that is very slow, don't think that you can come here and lowball, because homes are selling very close to list price now. This is from the 4 major counties that I was talking about. These are the closed price to original price ratio for single family homes. June, July, August 2022, homes are selling at asking, above asking. And then you can see that after August, it started to drop. You can see the percentage dropped. And then in January, it started to pick back up in February, right? So you can see that homes are now selling closer to their list value. And look at April, 98.6%. Look at May, 99.3%. So you can't come here and try to lowball, because like I said, the market is picking back up and homes are selling very close to their list price. But one good thing is people have a lot of inventory to pick from versus the winter time, where people barely, you guys, there's a lot of my clients who wanted to buy during the winter time, but there was nothing on the market that they liked. Like, it was all just not properties that they're willing to settle for. So that's one good thing, that the inventory is picking up. People have more options, but then again, you may have more options, you may not get it at such a cheaper price, right? The interest rates is also another crucial factor that affects the housing market and the home affordability. Now, in 2023, experts are predicting that the interest rates may rise due to inflation concerns. This increase in interest rates can make it more challenging for buyers, obviously, to afford a home, leading to either, a decrease in home prices or a slower increase of home appreciation. As of right now, the 30-year mortgage is at 6.7%, and that's for people with good credit, right? And higher interest rates, are going to create a smaller pool of buyers. And then we also have a small pool of sellers as well. And in that case, it kind of neutralizes or stabilizes the market from falling any further, okay? Many of my buyers are mostly worried about getting the home that they want, that their family will love, rather than the rate, because they can always refinance later. And obviously that depends on your personal situation. Just when, interest rates drops, that is going to bring more buyers into the market as well. That will fuel the housing market some more. Prices of homes are going to go up too. There's going to be more demand as well. There's also so many people on the sidelines waiting, just like you, for those low interest rates. Buy for the right reasons. Buy when you are financially stable. Home ownership, we all know that there's ongoing costs associated with that. There's many factors that come into play, like your finances. How long are you going to be staying in the home? 3, 5, 6 years. These are all factors that you need to take into consideration if you're planning to purchase a home. For some people, it might not be the best time for you to buy, and on the other hand, for some people, it may be. So you just have to weigh your pros and cons and analyze your personal situation. Don't let anybody pressure you. The Dallas housing market in 2023 is going to be affected by a combination of factors, including the supply and demand, the interest rates, affordability, the economy, and a major factor that is not letting our housing market crash is the limited supply, which I want to stress. So I don't think that the DFW market is going to crash 20%. I just see an immense amount of demand that is out there ready to absorb these homes that are coming under market value. You can see a slowdown in this area as well, but I don't think it will be that critical. I hope that you guys got some insight in this video about the DFW housing market. If you're thinking about buying or selling, please contact me through my contacts down below. I'll be more than happy to help. Even if you have any questions, you're unsure about what area to move in, and you want some advice, make sure to hit the like and the subscribe, you guys. It really helps me out. And also leave down in the comments below what your thought is about the Dallas housing market. Make sure to check out some of my other videos where I go around the DFW suburbs and show you what it's like living in those cities and more information about the area. So make sure to check that out. And with that being said, I will see you in my next video.